This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, August 27th, 2015. Euro dollar. So setbacks in Tuesday and Wednesday trade in the euro suggest the market could finally be looking to roll over in favor of resumption of the medium-term downtrend. At this point, we could see a breakback below 112.30, which would strengthen this outlook and open the door for a retest of that recent low that we saw going back to the 20th of July at 108.10. At this point, if you look at the weekly chart, it's very clear that the downtrend remains firmly intact, as the weekly chart shows here. And so the latest topside failure, although we did see a bullish breakout above 1467 on a short-term basis, the latest topside failure at 117.15 could be setting the stage for a medium-term lower top and bearish resumption. At this point, we do need to see a breakback above 117.15 to confirm bullish continuation and a structural shift, while inability to do so will again put the pressure back on the downside. Sterling dollar. So some sharp setbacks in trade in Wednesday trade in cable, with the market now trading just off that critical support at 153.53 going back to the 8th of July. At this point, a break and close below 53.53 would be required to take the immediate pressure off the top side, though these setbacks do warn of such a possibility and could open the door for a structural shift which favors renewed weakness in cable. Right now, we need to see a breakback above the high that we saw in Wednesday trade at 57.20 to put the pressure back on the top side, or firmly back on the top side. Again, overall, the constructive outlook remains intact, but it's in jeopardy if the market takes out support at 153.53. Dollar yen. So dollar yen has pulled back sharply in recent trade, with the market trading all the way down just shy of 116 ahead of the latest bounce. Price action is really choppy at the moment as the market consolidates those latest sharp declines. The rallies are expected to be very well capped ahead of 122, ideally in the 120.40 area, in favor of a lower top and a bearish resumption. The breakdown that we've seen this week does suggest that we're seeing a bit of a shift in the structure, which could open the door for deeper setbacks ahead. Medium and longer term, this uptrend still remains intact, but again, there is risk for additional corrective activity given the recent price action. Euro Swiss. So Euro Swiss maintains its recovery outlook, with the market still holding above previous resistance now turned support at 106.90 and contemplating a retest of the recent 109.62 highs. At the same time, if we do see a breakback below 106.90, this could set the stage for a resumption of declines. Ultimately, though, a break below 105.75 would be required to negate the recovery outlook in Euro Swiss. Aussie dollar. So Aussie remains locked within a well-defined downtrend, and the market is now just trading just off its recent multi-year lows set earlier this week at 70.40. A break below 70.40 will open the door for an acceleration below psychological barriers at 70 and towards a measured move in the 68 area further down. At this point, any rallies are viewed as corrective, with only a breakback above 74.40 to really compromise the structure. Dollar CAD. So dollar CAD continues to trade within a very well-defined uptrend, with the market recently pushing up to fresh multi-year highs, 11-year highs in Tuesday trade at 133.54, 133.55. At this point, though, technical studies are a little bit stretched, so we're seeing a bit of a corrective pullback. Any corrective decline should now be very well supported ahead of 128.60, with a higher low sought out in favor of an eventual resumption of gains towards and above next psychological barriers at 135. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, and the market looks poised for fresh downside over the coming days back towards that spike low that we saw, that multi-year spike low at 61.30 earlier this week. At this point, any rallies are viewed as corrective, with only a breakback above 67.40. That's the high that we saw back on the 29th of July to negate or compromise the current structure. SPX 500. So the S&P 500 is in the process of undergoing a major structural shift following the breakdown that we saw over the past week or so. At this point, we're seeing a bit of a bounce out from those recent lows that we saw down towards 1800. The rallies are expected to be very well capped on a close basis below previous major support at 1968, now turned resistance. Gold. So gold has seen some setbacks in recent trade after the market traded all the way up to 1170, a nice recovery off those fresh multi-year lows below 1100. At this point, the recovery does still look like it could be intact, with a higher low sought out somewhere above 1100 and back above 1170 and towards key medium-term resistance at 1233 further up. Really, only a close back below 1100 would compromise the recovery outlook and put the pressure back on those recent multi-year lows and potentially psychological barriers at 1000 further down.